Good morning, everybody. Good morning, good morning, good morning, good morning. I believe we are all well today. Good morning, good morning, good morning. I believe I'm loud and clear. Someone can confirm whether I'm loud and clear. Someone can confirm whether I'm loud and clear. So, good morning, and welcome to this session today. It's quite an amazing session. You guys have missed you a lot. So, karibuni sana. Welcome to this particular session. My name is Timothy Kiari, Research and Market Analyst. And today is quite a special day. It's on a Friday, actually the last Friday of the month, right? So I believe we are all well today. So the key topic for today is, really quite an enticing topic. And this is whereby we need to really understand how to build a trading strategy. And I'll be giving you 7 steps that will help you in terms of coming up with a strategy, okay? In terms of coming up with a strategy. So someone can help me remind people on Discord that I'm live. The live has started, right? So someone can help me remind people on live that on Discord that I've begun. So thank you, Daisy Bao, for confirming that I'm audible. So we're gonna be going straight to today's topic. And even before we go to today's topic, I don't know how many of you have really been struggling with a trading strategy per se, such that you know, when you're struggling with a trading strategy, you find yourself bumping from one strategy to another, or looping from one strategy to another, right? So, but in today's topic, or I believe after today's topic, once we cover today's topic, I believe you will have some clarity and somehow a best way to be able to approach the market. Okay, so good morning, Brian Ogore, I can see you. Good morning. So remember, like I've always told you guys, I've been in the financial market for quite some time, and I'll be celebrating 10 years, right? Being in the financial markets. And what I can tell you is that most of the traders, they spend years and years searching for a profitable strategy. That's a fact, right? But if you look at now, once you now understand the rules of the game, or once your eyes start opening in quotes, you realize that searching will never help you. What will help you is actually building one strategy that will help you to become profitable over time, okay? And you realize that one of the biggest mistakes that traders make, one of the biggest mistakes that most of the traders make, right, is that they copy someone else's strategy without understanding why it works, right? So that's where the signals come in. You're being told buy now, sell now, right? So you're copying someone blindly without even being able to understand how does this particular strategy works, okay? But the truth of the matter is that a strategy, right? A strategy only becomes powerful when you understand it, when you trust it, and you can be able to execute it consistently. That's what makes a strategy to become powerful. And in this particular session now, I will be showing you exactly how to build your own trading strategy from the ground or from scratch, right? Using a simple 7-step framework, right? This is a framework that I applied as well to be able to come up with the strategy that I trade. And I know most of you know the kind of the strategy that I trade, okay? So like I had put it in the description, this video is mostly for traders, especially those who keep changing strategies, all right? Those who feel overwhelmed by different trading concepts, and even those traders that want maybe probably to have a clear trading process. And if you're a trader, of course, also we're struggling with consistency, right? So this is the session for you. Or if you're this kind of a trader who really wants to create a system that they can be able to trust, then this is your session. So now allow me to share now the slides for today's session, so that we can be able to go through them and see what we are talking about. Okay, so it's how to build your own trading strategy, step-by-step framework for creating a repeatable trading system. Okay, so in case you have any questions, make sure that you put them in the chat. I'll be able to address all your questions. Okay, so you realize that one of the biggest, like I've said, one of the biggest mistakes is trading or copying someone else's strategy blindly. Okay, so what I want you to understand, even as we begin this particular session, good morning, Joy. What I want you to understand is that the key shift that you need to have is that a trading strategy is simply a set of rules, right? A trading strategy is simply a set of rules that will help you make consistent decisions under uncertainty, because we said that the financial market is full of uncertainty. Okay, so, and the truth of the matter, the other truth of the matter is that the simpler the rules, the easier they are to follow. So they should be as simple as ABCD, right? They say it's as simple as ABCD, as easy as ABCD. So your trading rules should be as simple as ABCD, so that you can be able to follow them. The easier they are, the easier, or the simpler they are, the easier it will be for you to be able to follow them. Okay, so so the first step that I'm going to give you is you need to define your market. You need to define your market. Ladies and gentlemen, remember the financial market, there are so many, there are a couple of markets in the financial market. So we have the stocks, we have we have the stock market, we have the forex market, we have the derivatives, we have options, right? We have commodities, we have indices. So we have to like really define which market that we want to, and in those markets there are a lot of assets that we can be able to trade, right? So you have to be really very clear. So because you realize that the first mistake that many traders make is trying to trade everything. And I will always repeat this, trying to trade everything, right? So they're in Forex, they're in commodities, they're in indices, they're in crypto, they're in stocks, all right? And what happens in terms of your results? Of course, they never truly understand any market, because you are hopping from one market to another. You're not taking time. Hopping from one market to another is not is the biggest problem. Okay, because you realize you'll see professional traders. Some choose to stick to one asset. Others choose to stick to different, maybe a couple of assets, but not again everything. A couple of them. Okay, but before they come to that point, they took time to understand one market. Maybe probably they took time to understand Euro USD. They took time also to understand gold. They took time to understand GBP USD. So they can be comfortable. Maybe probably today they trade gold. Tomorrow they will trade the Euro USD. Tomorrow they will trade GBP USD, because they have taken time to master this market. But as a beginner, if you now start hopping from market to market without having mastery, then there becomes your very first mistake. Remember the reason why I did the video of Power One, right? So 90 days mastering one market, right? Using one strategy, and probably even following one mentor if you're learning that strategy from a mentor, all right? So that is the Power One that I usually emphasize on, okay? So what I'll advise is that you pick one market and master that particular market. For instance, you can decide to choose gold, you can decide to choose Euro USD, GBP USD, USD JPY, Nasdaq, S&P 500, but it's one at a go. So don't take gold today and try to master it, and then tomorrow you leave gold, you go to Euro USD. You'll just be wasting your time. You'll be hopping from one market to another, and you'll never see result. So before you, if you want to begin with the Euro USD, make sure by the time you're going to another market, you understand Euro USD and you're making money with Euro USD. That will save you a lot of time in the financial market, okay? It will save you a lot of time in the financial market. And before you go to the second step, what you need to understand or what you need to ask yourself so that you can be able to define your market, ask yourself these kind of questions. What market am I willing to study for the next 6 to 12 months? Okay. And if you are a beginner, completely a beginner, it's always good to maybe probably begin with the minors or maybe some majors like Euro USD, which are not really much volatile. Then now, as you get the mastery of the concept, you can now advance to maybe probably commodities like gold, all right, which are a bit volatile, all right. So the reason I'm saying this is because if you focus on one market at a time, it creates what we call familiarity. And familiarity is what will help you to build confidence, because the truth of the matter is if I'm able to understand how Euro USD moves, right? I'm able to understand all the factors that affect Euro USD. Okay. So even when it comes to my trading, I'll be very much confident, all right? I'll be very much confident to be able to take trades for Euro USD because there is familiarity. And it is that familiarity that creates a confidence, all right? So step number 2, choose your time frame, all right? Choose your time frame. So you need to understand that your strategy should fit your lifestyle, because when you talk about time frame, some of the key factors that we consider to choose a time frame is our lifestyle, our availability to the market, how available are we. Okay, so your strategy should fit your lifestyle. All right, okay, so such that it should not be the other way around, not your strategy, not your lifestyle to fit your strategy, but your strategy should fit your lifestyle. So you need to ask yourself, like, probably, how much time can I realistically dedicate to trading? Okay, how much time can I realistically dedicate to trading? So if you have a lot of time, you can maybe probably your style of trading can be scalping, whereby maybe you can focus on 1 minute, 5 minutes, or even on even 1 minute, 5 minutes, depending on the asset that you're trading. Okay, so if maybe probably you don't have a lot of time like to look at the charts consistently, maybe probably you can choose to be a day trader, and that's where you can focus on the 15 minutes time frame, 30 minutes time frame, and 1 hour time frame. So a day trader is someone who takes a trade today and closes the trade before the end of the day. Okay, and if you don't have much time in terms of looking at the charts, then what you can do is become a position. I mean, a swing trader. Okay, a swing trader, and a swing trader is someone who trades from the H4, right? That is the 4 hour time frame and the daily time frame. So remember, your strategy should fit your lifestyle. Okay, so the best time frame is the one you can consistently monitor, ladies and gentlemen. So don't be a day trader because Tim is a day trader. No, my factors for becoming a day trader are different from yours, probably. Don't be a swing trader because someone is a swing trader. And sometimes, to be able to understand all this, it's also advised to try both of them. Okay, in your environment that you are in your lifestyle that you are in, try both of them, all of them, and you'll be able to perceive, you'll be able to know that maybe probably this is what is best for you. Because if you don't try, you might be thinking you are a scalper, but maybe probably you could thrive well in day trading or swing trading. So you have to try both of them and measure, how did you feel, what are the outcomes, or how was the pressure, right? And therefore you're able to know which trading style belongs to you. So that is step number 2. So when you go to step number 3, you need to find your hedge, right? And this is where now we say this is where the rain starts beating us. Okay, this is where the rain starts beating us. Okay, this is where the rain starts beating us, because we are not able to understand, or we are not able to define our age. We are not able to define our age. So when we talk about defining your age, this is where most traders now start. This is where most of the traders now start doing what? They start overcomplicating things. Okay, that is why Karen now says that entry is my major challenge. Okay, because of Because of the age. She doesn't understand her age. Okay. So what is an age? An age, right? An age in its simplest form, right? An age in its simplest form is a pattern or behavior that repeats over and over again. Why do we analyze the financial market? Why do we do technical analysis? Because we want to look at what happened in the past so that we can be able to see or predict, right, what will happen in the future. Why? Because the market keeps repeating the same patterns over and over again. So your work simply as a trader is to study the markets. And the reason I usually tell you, even if you're not trading, just open the chart, scroll backwards, do some back testing, right? You'll find me sometimes doing back testing, and you might wonder with my years of experience in the financial market and I'm still back testing because I want to see these patterns. And the more you see the patterns, the more now they stick in your mind, the more they become familiar in your mind, such that even when they are unfolding in the life market, you're able to perceive this is it, right? This is it. This is the entry that I'm looking at, right? Because you have done a lot of back testing. So, Karen, another way to answer your question about entry is to do a lot of back testing, right? Do a lot of back testing. Try to identify those repeatable patterns, okay? Try to execute them in your demonstration account before you go to the live account. So when you're trying to identify these patterns of behaviors that repeat over and over and over again, you need to ask yourself, what do I repeatedly see, right? When you look at the markets, what are you repeatedly seeing? Okay. What setup appears frequently? When you are just scrolling the charts, what setup are you seeing appearing frequently? Okay. And what creates the best results? Okay. So this is another question. All of those patterns that you're seeing, which one creates the best results? Of course, when you're back testing, that now makes you understand that even when you're back testing, it is also important to journal, so that if you're backtesting, let's say maybe probably order blocks, you're able to see that out of the 30 patterns that you saw for the order block, maybe probably 25 worked, 5 did not work. And that can be able to give you now maybe probably a rough idea in terms of the probability of that particular strategy. Okay. So you have to make sure that you are journaling, even as you are backtesting, make sure that you are journaling. For example, you might maybe probably identify liquidity sweeps, right? You might identify liquidity sweeps. Like Mike Masharia, he loves liquidity sweeps. You might identify trades pullback. Someone else might identify market structure shifts, right? Someone else might identify fair value gap retracement. Someone else might identify breakout and retest. Someone else might identify support and resistance. Someone else might identify demand and supply. Okay. So, because we all can be able to see differently in the financial market. So, the goal here is not to find perfection. Remember, no one is perfect. No strategy is 100% perfect. So, the goal is not to find the perfection. And the reason I'm saying this is because you might backtest. You realize that maybe probably out of 30 patterns that you were backtesting, 28 were successful, 2 did not become successful, right? That should automatically tell you that even when you start trading, there will be instances when you will hit stop loss, even if the strategy or the setup was A plus setup. There are those instances that you'll hit stop losses. Okay. So probably maybe the market conditions changed, the strategy did not work, but now that should not rule out the strategy, because this is again where most of the traders they go wrong. Okay, because they have backtested a strategy. When they go live, they take a loss, right? And they now start doubting the strategy. Okay, so you only doubt if you had not backtested. But for someone who had backtested, I tell you, you have to stick to your strategy, because finding an hedge is not out of the first trade that you take or the 5 trades that you take. Remember, I've always said, if you want to know your hedge, look at your last 100 trades. I don't know, since you began, whether you have been able to journal and your first 100 trades. If not, start now. All right. If you have not been able to journal to know your hedge, start now. The best time is now. So be journaling those trades. Look at the first 100 trades. they will tell you your hedge. Okay, they will tell you the hedge of that particular or your hedge. Okay, so then now remember the reason why we are doing this. The key goal is not to find perfection, but the goal is actually to find repeatability, right? Repeatability, because there are those, we want to identify those patterns that repeat themselves frequently or often. Okay, that is what we want to identify, those patterns that repeat themselves often. Okay, that is what we want to identify. Okay, so if any questions, make sure that you ask, right? So like I said, an edge is just a repeatable behavior that produces positive expectancy over time. So you have to backtest, you have to journal the backtesting, so that now you can be able to understand the probability of that particular strategy. Then step number 4, right? Step number 4 is to build entry rules. Okay, so how do you build entry rules? Now let me make it clear. Remember, for a strategy, there are those strategies that, of course, we met there. Support and resistance, they were already invented. We met them. ICT, someone invented, right? Supply and demand, it was invented. We met them there. So before even you think of maybe probably inventing your own strategy, it's good to begin from the strategies that already exist, right? Because if you look at all those strategies that are already there, let's look at maybe probably demand and supply, those advanced strategies, ICT, all right? They all came from the very basic strategies of the trend lines, of the candlesticks patterns, of the support and resistance. And the reason why I always advise as a beginner, don't just jump to do supply and demand support. Order blocks. Begin with these basic concepts, right? Support and resistance, trend line. Try to understand candlesticks patterns, because you'll see there is a lot of positive correlation of these basic strategies with the advanced strategies. So that tells me that these people who came with this advanced strategy, they built from the basic strategies that already exist. So they saw some gaps in those basic strategies, and then now they advanced them. They looked at ways to be able to fill those particular gaps. Okay, so like I was saying, you can decide to begin with the strategies that are already there. So of course, begin with support and resistance, learn them, understand trend lines, understand candlesticks patterns, okay? Before you start now learning these complex strategies. Now, when you come to the advanced strategies like supply and demand, like ICT, all right? So the best thing you can do is pick one strategy at a time. Remember power one strategy, one asset, one mentor. So if I'm doing supply and demand, right? So I will pick one asset. I backtest supply and demand. I learn supply and demand using that particular one asset, one market, that one, right? Following that mentor that teaches supply and demand consistently, okay? Until I get the gist of that particular strategy. Then now you can stick to that, or probably you might want to advance. There is no reason, there is no mistake of advancing. You might want to learn maybe probably another strategy, but before you learn another strategy, make sure that you have understood the first strategy and you're already trading it consistently. Because I tell you, once you understand that particular strategy and you trade it consistently, you're making money profitably, you'll not even get time to be able to learn the second strategy, okay? Because you're already making money. What else are you looking at? You're already trading consistently and making money, so you can stick to that, right? So that's what I can advise. The other way is for you inventing your own strategy. And we have said, for you to be able to invent your own strategy, you have to sit in the market, observe the market, look at what the markets are doing. Okay, and inventing your own strategy, it can be an already existing strategy, but you spice it up. You add your own additional confirmation metrics, right? And that becomes your own strategy that you have invented. Or you can be able to look at the market, study the markets, and see what the market is doing, right? See what the markets are doing, the patterns that the market is doing, and you might realize that maybe probably you might see there is a particular way the market behaves in a certain time. every time that time reaches, or that particular period of duration of time reaches, the market reacts in a specific way, in a funny way. Those are the kind of things that you really want to master. But what I can tell you is that before you invent your own strategy, first of all, utilize the already existing strategies. All right, utilize the already existing strategies so that you are making money. And the moment you are making money, it gives you even that morale. It gives you that psych that now you can, in your free time, as you're waiting for your strategy to formulate, you can be able now to study the markets and being able to identify these unique patterns or these unique something that you might maybe probably be able to identify, and that becomes your unique strategy. All right. So those are two ways to go about it. Right. So, and now the fourth step that you're talking about is building your entry rules. Okay. So under building your entry rules, you need to define exactly what must happen before you enter current, right? You have a major problem. Your major challenge is entry. So what you need to do is that you need to define exactly what must happen for you to enter that particular market, for you to execute a trade. So if you cannot define that thing, then you need to go back to the drawing board until you identify that unique thing that must happen before you enter the trade. Let me give you a good example. In the football match, actually right now in the World Cup season, I don't know which team you're supporting. I am Team Portugal. I don't know whether we're gonna make it, but I'm Team Portugal, right? So if you look at the football match, before they begin the game, they have to hear the whistle from the referee so that now they can start playing. Okay, so even for you, the market has to give you a sign before you click that buy, before you click that sell button. The market has to give you a sign, and that's what I'm saying. There has to be that definite thing that must happen before you enter the trade. So you have to be specific, right? It has to be specific. When I talk about specific, let me begin by giving you an example of a bad rule in terms of your entry. So a bad rule in terms of your entry is that someone might say that I enter when the market looks bullish, right? So I enter when the market looks bullish. This is a very bad rule because market is bullish even when we have all-time highs. And now this person trying to enter the market at all-time highs, we know what happens at all-time highs. The market has to retrace. So, and this someone will be in drawdown. Okay. So, but a good rule is a rule like maybe probably I enter when liquidity is swept. All right. Market structure shift bullish. All right. And price retraces into a fair value gap, or price retraces into an order block. You see, those those rules are very different. The first one is very vague. It's not specific. That I enter the market when it looks bullish, very vague, right? And you are likely to lose money with that particular rule. But if you have a rule like this, Karen, that before you enter a trade, you want to see liquidity being swept, right? Then you want to see market structure shift or change of character, right? And then now the price retraces, maybe probably if you're using fair value gaps, or maybe probably if you're using order blocks, like I trade using order blocks. Now you see that kind of an entry. It's very precise. It's very specific, right? I believe we are all together, Karen, and you're being helped, all right? I believe you're being helped. Esther says, Black Stars, babe, all the way. Right, let's go. All right, of course, Africa is our business. Africa is ours, and it's our business. That slogan by Honorable Didi Nyoro, how he says it. I love how he put it. Okay, so so for you to be able to come with that kind of a good rule, then what you need to do is this: ask yourself some of these questions, like when do I enter? Then now start looking for the things that you want to do, the things that you want to see before you enter, depending with your strategy, right? Depending with your strategy. And once you do that, then now you'll be doing yourself a lot of justice. Okay, you'll be doing yourself a lot of justice. Okay, So welcome, Patrick. I can see you there, Patrick Mugambi. Right, I can see you, Mr. Junior. Patrick used to be my high school classmate, so we have some good relationship from high school. So I used to be his captain, school captain. So let's get back to the learning of what you are learning today. So you need to ask yourself, to come with a good rule, you need to ask yourself, when do I enter, right? You need to ask yourself, what confirms my trades, right? You need to ask yourself, what invalidates my setup, okay? So the moment you ask yourself all those things, you become more objective, right? And the more objective your rules are, the easier they are to execute, okay? The more objective your rules are, the easier they are to execute, right? I believe you're learning something. So, I believe you're learning something. I need to learn something from the professional. Yeah. Stick around, okay? So, build entry rules, because without precise entry rules, therefore, you might be higher chances that you are not likely to make money. Higher chances is that you are likely not to thrive in these financial markets. So you have to have a precise rule, all right? You have to have precise rules. Now, once you have these precise rules, what next, right? So I've given you examples of good versus bad rules, all right? So the next thing that we need to define is the risk management. All right, you need to define step number 5. You need to define risk management. You need to define risk management, right? So a strategy without risk management is not a strategy, ladies and gentlemen, right? It's like a vehicle without brakes. That is not a vehicle, right? A vehicle without good brakes, that is not a vehicle. It will definitely roll you, right? Or you're definitely going to make an accident. So even in the financial market, you might have those good rules. The first 4 steps that we have talked about, they might be in place. But if you don't define your risk management, therefore, there is no strategy. It's purely gambling. It's purely gambling. So you need to define risk per trade. The rule of the thumb is this: you have always said don't risk more than 1 to 2% of your risk, right? We have always said that. I believe you have heard that phrase now, not once, not twice, several times, and now it should be able to sink in your medulla oblongata. But the problem is that this game is psychological. So there is the aspect of greed. You realize that people know that they are not supposed to risk more than 2%, but they want to risk 5%, they want to risk 10%, okay? So the reason why we say sometimes experience is the best teacher, but I wouldn't want you to experience losses so that you can be able to learn. Take it from me, right? Myself, I experienced losses because I was greedy. I was introduced in a very greedy way. Like I told you, I was given a 90-day spreadsheet and I was told if you compound these, if you deposit $100 and compound in 90 days, you'll be having $1 million. So I came with that mentality. I did the first time, I failed. The second time I blew the account. I blew several accounts, right? I blew several accounts. And the aspect was risk. The strategy was okay because I'm one person who loves analysis. I'm one person who loves charts and all those analyzing, okay? So the market getting the analysis or doing the analysis was not a problem. I really suffered with risk management, and because of bad introduction, someone who introduced me to the market with that mentality of compounding 90 days, $100 in 90 days, and making $1 million. Okay, so always make sure that you are not risking more than 2%. Okay, in your account. Remember, this is it's not a get rich quick scheme, right? Don't look at what influencers are putting in their socials, all right? Remember, like I've always told you, my mantra is this: trading is very personal, all right? It's very personal, all right? Do your own trading with the discipline and consistency, all right? With the discipline and consistency. So don't try to compare yourself with Tim. Don't try to compare yourself with maybe probably the influencers you're seeing online. Just understand that this is a step-by-step game, okay? It's not a get-rich-quick scheme. Actually, I would say it's a get poor quick scheme if you don't follow the rules, because you'll be blowing and blowing and blowing and depositing. So you have to be patient so that now you can be able to see results over time. So don't try to make a lot of money within a short duration of time, because you might be lucky today, but tomorrow you definitely have chances that you're going to be caught and you're going to blow that account. So you also need to set maximum daily loss. Most of the traders, funny enough, is that they set only the maximum targets, profit targets, but they also fail to look at the loss limit. Why? This is very important. And I've always thrown this challenge to you. Ask yourself, for those who have gone the ProFarm way, why do the ProFarms have a maximum daily loss limit and also they have a maximum drawdown? It's because they want to protect their capital, right? It's because they want to protect their capital. So even for you as a trader, your goal number one should be protecting your capital first, because like you have always said, this capital is your seed. So if you're going to mess up with this capital, then you don't have an opportunity to make money in the future because you don't have the seed. It's like eating the seed instead of preserving the seed and planting for the next season, right? So don't eat the seed, don't misuse the seed. Take care of that particular seed, and this is your capital, right? This is your capital. This is your capital. The seed is your capital. Okay, the seed is your capital, right? So have maximum daily loss. So for instance, you can say that you'll stop trading if you have two losses, right? If you have two losses for this particular day, you stop trading, right? You stop trading, you wait until next day. You can also come up with the weekly drawdown limits. Maybe probably you say maybe probably if you lose 2% or 5% for that particular week, you are done. Even if it's on a Monday and you have already lost 5%, that is the weekly maximum drawdown. Go back to demo, right? If you want to trade, go back to demo. Okay, so you have to be strict with yourself. You have to be strict with yourself. And like I've always told you, ladies and gentlemen, for someone who wakes up in the morning, goes to work, does whichever job they do, right, and get paid at the end of the month, only to come and blow that particular capital in 2-3 days. No, the things have to change, because it's very painful, right? It's very painful. It's very painful. And the reason why I've always advised, don't invest with what you're not willing to lose. Okay, so make sure that you have paid your bills, you have done everything. Even if it's $20 that is remaining, it's more than enough, because if you're going to lose that $20, nothing is going to change. Your lifestyle is not going to change. Your house you'll not be kicked out by the landlord because you have not paid rent. No. Why? Because you had already paid all your bills before you deposited in your account. Okay, so and you should be comfortable with that $20. That's what God has given you. Remember, I've always challenged you guys, we are stewards. If you cannot manage the $20, even the $1,000, you might not even get it, because you're not trustworthy with the small $20. So why should you be given $1,000 if you cannot be trusted with that small? And the small is relative, because you're all able to different. To someone, $20 is what God has blessed them. To someone else, $50. To someone else, $1,000, and to someone else, even $1 million. So they have to be trustworthy with that, so that now they can be able to expand, they can be able to grow. God can be able to bless them with more, because it's all about stewardship. I think I did that an amazing video I did there about being stewards. It's in my YouTube channel, Being Steward. If you listen to that video again and again, I think it's gonna change your way. It's gonna help you to realize that your number one goal as a trader is to protect capital, ladies and gentlemen. Okay, because survival comes before profitability. So protecting your capital is your first priority. It's your first priority. And if you understand that, then it solves completely the aspect of over-risking using big lot sizes, right? So that eliminates that completely. And the moment you understand you are a steward, then, right, then you become more responsible. And I'll throw you to Matthew 25. I think it's Matthew, is it Matthew 25, or the parable of the talents, right? So, but I've discussed it even in that particular video. So just go and listen to it. I believe it will change your way of thinking. Okay. So before we go to step number 6, right? Before we go to step number 6, Make sure you like, subscribe, right? Hit that like button. If you have not subscribed, it's your first time here, welcome so much. Hit subscription button, right? Subscribe, and also share with someone. Maybe you know someone who is interested, right? Because the knowledge I'm sharing here, guys, these are $1 million knowledge. You know what I'm saying? You'll go to people, they'll charge you a lot of many dollars getting this information, but I'm just here. I usually share it free of charge in my YouTube channel there, right? So someone asks, how about charges for a lifetime membership? Let me know our Apple Bishop, okay? So what I can tell you is that these, for me personally, I don't give signals, because if you say lifetime membership, I usually see these in terms of those people give signals, okay? So I don't do signals, so you'll not see me maybe probably saying a lifetime membership. And let me tell you, lifetime membership is also kind of scam, because what happens if someone, maybe probably I might get rich tomorrow and I say no more to Forex, and you've paid you're paid lifetime membership, or maybe probably something might happen, you know. So but again, what I do is I've been guiding traders in terms of trying to gain a discipline, consistency with what I dubbed the 52 weeks trading challenge, right? And we were actually, this week should be week number 17, right? But due to public demand, people said that we can begin all over again, because there are some people who joined in. And now we are in week, we began again, we are in week number 4. There are those still holding week 17, and also they are trading now, this being the second week. So they decided to go with both. So maybe probably you can check on me on that. There is a video I did about 52 weeks trading challenge. But before you proceed, maybe probably you can check on me on that. I believe you have my number, right? The person who asked that question. So reach out to me and I'll be able to guide you accordingly. Good morning, Bugwa. I can see you there. Andrew says, hi, Timo. I'm asking, can I open a position on gold with a $10 account? It depends on which broker, okay? Because again, I think a $10 account, even in scope market, you cannot be able to do that. You cannot be able to do that, because gold, it is very tight. The spreads are very tight, and therefore the margin, with $10 margin, will not allow you to open a position. So you better upgrade maybe probably to $20, or you can do the currency pairs. If you have only $10, you can do only currency pairs and avoid the trading gold, okay? So for those who don't have my contact and want to reach out, so I have that group. It's a private Discord group whereby I guide traders. There are terms and conditions to be able to join that group. And for more information, you can just drop an email to me. Team Forex Traders Launch. You know, this is public. I can't share my number here. But I know majority of you have my numbers. Team, for those who don't have, Team Forex Traders Launch at gmail.com. Okay. Team Forex Traders Launch at gmail.com. Drop me an email, right? Drop me an email there, and we'll be able to exchange numbers. You know, I cannot share my number publicly. Yeah, you understand? I might be receiving very funny SMSs and all those, you know, data protection anyway. Okay, so I would love to join the 2 weeks trading challenge. So Daisy, also reach out to me. You have my number, I'm sure. WhatsApp, you can reach out to me and I'll be able to guide you how to go about it. Okay, the purpose of the challenge is not to compound $100 to $1 million. No, the purpose of the challenge is to be able to build discipline, consistency, even as we learn, right? Because you're going to understand how we look at the markets, or how to look at the markets, and many things, right? So you can just get in touch with me for finer details on that. Okay, so step number 6, set your exit rules. The much you have your entry rules, right? Also, you need to have your exit rules, okay? And when you talk about exit rules, so you realize that most of the traders, they focus on entries only, just like they focus on TPs only and forget the stop loss, right? So they focus on how much they are going to make. They don't focus on how much they are willing to risk, or how much they could risk, right? So it's funny enough. So they focus on entries and then they forget the exit. But for a professional trader, they focus on exit first. All right. Of course, they know this is my entry, but before they go even to the take profit, they first of all look at the risk, the exit. All right. They want to know where they will exit in case what they saw will not work out. Where will I be able to exit? All right. And these are places where now you need to put your stop loss. And when you are putting your stop loss, there are many factors that we look at: the market structure. All right. And also we do look at maybe probably the 2% rule that we have talked about. Right. So the best questions you can be able to ask yourself around this is maybe probably where am I wrong? Okay, where am I wrong? Because where am I wrong will help you to be able to understand the key levels that in case the price goes past those levels, then maybe probably your strategy is wrong or the market conditions have changed. Okay, the market conditions have changed. So you need to understand that your stop loss should sit where your trade idea becomes invalid. That's what I'm trying to say. Your stop loss should sit where your trade idea becomes valid, such that in case your stop loss is hit, you know that particular setup is invalidated. And if it's invalidated, then it doesn't mean that you re-enter again. Why are you re-entering and the setup is invalidated? That is over trading. That is greedy. That is revenge trading. And it doesn't end up with any good, right? It doesn't end up with any good. Okay. So you have to be really conscious. You have to be really conscious when you're answering these particular questions. So your stop loss should not be where your emotions are, right? Your stop loss should not be where your emotions are comfortable. Okay, don't put your stop loss where your emotions are comfortable. Okay, so a good exit plan will basically give you what? It will basically help you remove emotional decision making because you'll be comfortable. Where I have my stop loss, I'm not risking more than 2%. Where I have my stop loss, I'm not guided by emotions. Where I have my stop loss, in case it is hit, I'll understand that the strategy has been invalidated. Okay, so and also it's important to ask yourself, because you can exit in the trade two ways, right? When your stop loss is hit, or probably once your TP is hit. So you also need to look at the TP aspect of it, and you ask yourself, right? Where do I take profit? For instance, you can use the previous highs, previous lows if you're selling. That is basically the liquidity targets. You can also use the fixed risk to reward ratio. Like I've always said, don't do, aim for a fixed to reward ratio of 1:2, right? That is a bit comfortable, or a bit comfortable risk to reward ratio of 1:2, because as a beginner, we expect you to have more losses than wins. And I've always shown you that mathematically, if you have a risk to reward ratio of 1:2, you can lose 6 trades and win 4 trades, and you still remain profitable. Okay. So also consider those kind of things. So your exit rule should be very clear. Either you are using, in terms of profit, you are using a fixed risk to reward ratio, but also even if you're using a fixed to reward ratio, remember everything, whether take profit, whether stop loss, everything is guided by the market structure. Because again, don't exaggerate. Risk to reward ratio of 1:40, and you know the market is not likely to reach that place today or tomorrow or even this month. Okay, so you have to be realistic. You have to be realistic, guided by the structure. Okay, guided by the structure. All right. So that is how you come up with the exit rule. Okay. And the last step that we need to understand today is to always test and improve. What I usually say: backtest, journal, analyze, and refine your execution. Okay, so this is where confidence comes from, because there are those people who say that they don't have confidence to trade, and I usually ask myself, have you backtested? Have you journaled? Because if you've backtested and you have journaled and you can see the results of your journal, then that should speak to you, right? That should speak to you. And also, you eliminate the aspect of perfection. Remember, no one who is perfect. Even in holiness, in salvation, we are not perfect. The pastor is not perfect. The reason why we keep repenting now and then when we are praying, because there are those sins that we do knowingly and others unknowingly, right? So even in the financial market, don't come with the aspect of perfection. You will fail 100% if you come with the aspect of perfection. And what does it look at in terms of the aspect of perfection in the financial market? That's where you don't want to take losses. And if you don't want to take losses, if you are not comfortable taking losses in the financial market, therefore that is not your thing. Just maybe probably accept taking losses or quit altogether. Look at something else that you can be able to do that will not give you losses. And I wonder what is that? Because even in businesses, we make losses. Even in normal businesses, we make losses. Even as human being, eh? You have 1,000 notes in your pocket. When you are going to remove your handkerchief, or when you are removing maybe probably your keys, you drop that 1,000 note, and it goes like that, right? That is a loss. Can't do nothing about it. It's inevitable, right? So we have, I think we did a webinar, a live session. It was a live session about how to deal with losses. Okay, so like I've said, this is where testing and improving is where confidence comes from, right? So confidence does not come from YouTube, right? Confidence does not come from you listening to me. Confidence does not come from social media, right? It is not from opinions. It is from data. It is from data, right? And data, you get that data through backtesting, right? You get that data through backtesting. So the reason why I always emphasize backtest your strategy, backtest it, backtest that particular strategy that you have learned, backtest by yourself. Yes, maybe probably I trade ICT order blocks, they work very well for me, and you just come in. Remember we said copying someone's strategy without being able to understand it. So make sure you backtest it by yourself. Once I teach you, go and backtest. Have your own data. Prove yourself, because that will add more confidence to you as a trader, because it's something that you have already tested. It's something that you have already seen that it works, and therefore it will increase your confidence, right? Period. Data. It's not from YouTube, it's not from social media, it's not from people's opinion, it's from data, right? You have to backtest. You have to backtest. So, and also you have to journal your trades, because you can backtest and you're not journaling. Where are you going to get the data from? Because you want this data so that you can use this data to validate, all right? So as you backtest, journal the trades, track your win rate, track your risk to reward ratio, your risk to reward, all right? Track your maximum drawdown, track your common mistakes, and very importantly, your emotions, your psychology, because trading is 20% what? Technical, or whatever we learn, but it is 80% psychology, meaning you might be able to know how to analyze the market, you might have very good entries and setups, but if you're not sharp psychologically, if you're not well psychologically, you're still not going to make money, right? You're still not going to make money. And I have a lot of psychological videos in my YouTube channel, because I don't have time to teach several strategies. I always teach what I trade, right? I teach what I trade. So the reason why you'll find a few videos will be about my strategy, but a couple of videos, like 80% of my videos, they are psychological. Even what you're doing here is all about psychological anyway. It's somehow psychological, okay? Because that's where the rain start beating us. Psychology, very important. Psychology, very important, okay? So why the data is very important? Why do we want to have this data? Because the data is going to reveal what works. The data is going to reveal what doesn't work. The data is also going to tell us what needs to be improved. So if you know what works, if you know what doesn't work, and if you know what needs to be improved, then you're not trading from assumption. You are trading from a point of confidence, right? A point of confidence, because you know you have back tested that. You know this works, you know this doesn't work, right? You know over leveraging doesn't work, you know over trading doesn't work, you know what do we call it? Over trading doesn't work. But why should we overtrade? Why should we revenge trade if we know it doesn't work? Right? And it's only they say it's only a fool It's a phrase. I'm not the one who's saying, right? I've not called someone a fool. It's a phrase that says only a fool who does the same thing, expecting the same thing all through, expecting different results. And also, a Swahili phrase says that kosa si kosa, kosa ni kurudia kosa. So if I know this is a mistake, then if I repeat it, I'll be doing the mistake now. I'll be doing the greatest mistake if there is a greatest mistake. But a mistake is a mistake anyway, right? I believe you understand what I'm trying to emphasize here. So the data will reveal what works. The data will reveal what works, all right? The data is going to reveal what doesn't work. So you go with what works, you stop doing what doesn't work, right? Then it will also show you where you need improvement, okay? Why? Because you understand that the market rewards evidence, right? The market rewards evidence. So you need to have a lot of evidence, not assumption. The market will not reward assumption, but it will reward evidence, okay? It will reward evidence. So start journaling, right? Start journaling. I have a very nice journal that I created. We are using this for the 52 weeks challenge. I shared it with the team. It's auto-populated. It helps you to track your win rate. It helps you to track current balance and all that. So once you key in data, it auto-populates itself, right? So make sure you journal. Make sure you journal. You can come up with your own, and you have said the things that you need to journal: the win rate, the risk to reward, the maximum drawdown, the common mistakes, and also the emotional aspects of your when you're trading. What are your emotions? Are you fearful? Are you greedy? So that is actually the most important, because I know most of us, we track the entry, the TP. Yes, they are important, but they're not as necessary as the emotions. Because if I want to track my entry, what time I took the trade, which pair I traded, I can go to the MetaTrader 5 history and get all that from there. Okay, but you'll not get from the MetaTrader 5 your emotions. You'll not get your common mistakes there, right? So you have to journal your emotions. Very important. Very important. You take a screenshot of the setup before it materializes, and also after the setup has materialized, or maybe probably it has been invalidated. You have to have that screenshot. Those two screenshots are very important, right? Because you want to revisit and see what you saw, and why did the market not play out like you saw, or why did the market play out like you saw, right? So it is very, very, very important. The reason I'm sharing this particular topic is because myself, all right, you realize that those that have been able to follow me all through, I've always been sharing these points or these pain points from my own experience, the mistakes that I did myself as a person, right? Because it took me about 2 years to be able to really understand what's happening in the financial markets. But again, a bigger chunk is not that I didn't really understood, but of course it's because of my professionalism. I used to be a banker and a bank teller, so there was not much time to learn and do all those stuff. So the reason why my journey prolonged. Okay, so what you need to understand is this. Myself personally, before then, as a newbie, I used to think that successful traders had secret strategies, but I later on came to realize that there were no secret strategies. The strategies are all over online. They are being taught online. You can Google them. A lot of strategies. Okay, so but the moment I realized that successful traders simply had clear rules and discipline to follow them, and I started implementing them. Therefore, I started seeing results. Okay, because mine was strategy hooping, right? Overcomplicating things, lack of testing, right? I didn't really backtest. I didn't journal. I had poor risk management, like I told you. I tried to compound $100 in 90 days to $1 million. From the person who introduced me to the financial market, but it was not possible, right? So I had a lot of greed, because there is a lot of greed actually. Even for professional traders, I don't think there's someone who can be able to compound. I've not seen one who can be able to compound $100 into $1 million in 90 days. I've not seen one. If you have heard of one, please let me know of them. Okay, so so once you understand what the mistakes you are doing, so the best thing is now to put your best foot forward and to be able to avoid those mistakes. Okay, so even before I look at some of your questions, the trading strategy framework is this: one market, choose your time frame. I mean, choose your market, choose your time frame, have an edge, define your entry, define your risk, define your exit, and also make sure you back test. Okay, so to build your strategy, define your market, pick one, master it before you go to the next one. Choose your time frame, and we said here your strategy should match your lifestyle. Then find your edge. And I told you how to find your edge. You can use the existing strategies, right? Or maybe probably you can come up with your own. And the basic of all this is to look for repetition, those patterns that keep repeating themselves in the market, because the market will always do, it will never do something new, by the way. You're not anticipating to see something new in the market. It will keep repeating the same setups. It will keep repeating the same setups. Okay, so, and that's studying the patterns is what is going to give you an edge. Then now build your entry rules, and you need to be specific. Then you define your risk management, because it will help you protect your capital. And then now set your exit rules, know where you are wrong or where you are right, where to take your profits. Then you need to test and improve, because your said data will help increase the confidence. All right, so before we wind up, I can see some questions here. Are there traders who have higher chances on profit than losses? It depends on your mastery, Patrick. Traders who have mastered, successful traders, these are traders who have been able to identify repeatable patterns. Their strategy have an edge, and therefore they have an upper hand of making more profit than losses. But all in all, even professional traders, they make losses, because no one is 100% in the markets. Okay, so my mentor for the longest time, good one. Thank you, the Burning Spear football. And 1416, well, you have a very long name. Okay, is it bad to be overambitious, not greedy? Overambitious is also bad, because overambitious is another name for overconfidence. So in the market, you need to be neutral, Mr. Patrick. You need to be very, very neutral, not underconfidence, right, and not overconfidence. So your confidence needs to be neutral, right? So if you're overambitious, then that's meaning overconfidence, and overconfidence, you are likely to not to respect your trading rules, right? Because you're overconfident. You start calling yourself the gods of the market. When you buy, the market has to buy. When you sell, the market has to sell. No, and so it's wrong as well. Overambitious, overconfidence, it's not right. Okay, so when trading pullback strategy, which is one of the confirmation candles to look at? Pullback strategies. You know, when you're talking about pullback, pullback can be, I think, all the strategies. All the strategies is about pullback, by the way, because if I'm trading a demand, right? If I'm trading a demand zone, okay? So if I'm trading a demand zone, so the price has to move away from the demand, then come and retest the demand zone. If I'm trading the order block, the same thing. So what I can say is this: when in terms of candlesticks patterns, if you're buying, all right, if you're buying, what you need to look at is the rejection candlesticks, like maybe probably the gravestone doji, the bearish engulfings, right? The bearish pin bar. If you are selling, you can look at the dragonfly doji. You can look at no, am I mixing myself? So if you're buying, you can look at the bullish engulfing, the bullish pin bar, and also the dragonfly doji. If you are selling, you can look at some of the rejection candlesticks, like the bearish engulfing, the bearish pin bar, and also the gravestone doji. Okay, so Marubu Steve says, how did you overcome fear of execution, or rather hesitation, despite correct analysis? It's backtesting. I think that's what this particular session was trying to address, because if you backtest and you have data and you know that it works, then you should not be fearful, right? You should not be fearful. And you understand the reason fear can come from different things. It comes from one major thing, because it's part of the two bigger psychological aspect of trading. The first one is greed. The second one is fear. And most of the traders, especially the newbies that are coming, or the beginners, they come with greed because they have seen a lot of hype via social media influencers and all those people. So they come with a lot of hype, right? With a lot of greed. So they lose money. And the moment they lose money, right? The moment they lose money, what happens is that they now become even more fearful. Okay, they become even more fearful, because if you lose money, you become fearful. You see a setup, but you fail to execute. Okay, so to be able to overcome this fear, or how I overcome this fear, is through backtesting and journaling, so that I build up a set of data to be able to validate my strategy. Okay, because you'll still lose in the financial market. Like I said, even professional traders lose. So, but if you've backed up your strategy with the backtesting, you have data that this strategy works, then fear should not be a problem. You should be able to overcome fear. The other way is to use the minimum risk possible. Even if you have $1,000, use 0.01, 0.01, okay? And also maybe probably you can do a little bit of demo until you gain your confidence. And the moment you gain your confidence, now fear eliminates itself. Okay, so those are some of the strategies about how to overcome fear. But all in all, there is also a full video, a full episode in my YouTube channel about overcoming fear. So you can check that, right? You can check that. So, and listen to it, and then therefore you let me know what happens. Okay, so also make sure to join my Discord. So let me share my Discord link. So that's where we can engage. Probably if for more engagement, I have the Discord there, so you can see that link. So you can be able to join my Discord, and we build a community together, right? So with that, ladies and gentlemen, thank you following silently, though learning a lot. Thank you, Mercy. Thank you, Mercy Kendi. You're very welcome. You're very welcome, right? And everybody else, I appreciate your time. I didn't want to take much of your time. Thank you so much. I believe you have learned something. You can always go back to YouTube, listen to this video again and again, and other videos that are there. And I believe they're gonna be informative. All right. So all the best. I've shared how to reach out to me in case you need help. Join the Discord we discussed there. All right. So, and all those stuff. All right. So my email I've shared with you. So you can always reach out to me. I'm always available to guide you, because my desire is to see you being successful. All right. So thank you. Thank you so much. I think the last question, please advise on scaling capital. On scaling capital. I think Morris is this. This is Marube Steve. Okay, so Marube Steve, I think you have not really taken time to go through my YouTube channel, because all those questions they address. Let me share with you a video I did about how to scale an account, a small account. Okay, so I'm getting that link right away. I'm getting that link right away. That's what I'm looking at the moment, right? Just give me 1 minute. I scroll down and get that link for you. But it's all there. It's all there. It's all there. Even pullback trading, right? So let me show you this. All right, let me show you this. I share screen. All right, share screen, share the entire screen. Share the entire screen. All right. So now when you come to the YouTube channel, right? When you come to the YouTube channel, you see the person who asked about a pullback. This was a video we did about pullbacks. You see this video here was about a pullback. So it explains more on pullback. So whoever has that particular whoever asked that particular question, you can go there and get that particular video, right? about pullbacks, then how to scale a small account. That's where I'm going. I had that video. I did that video. So I have a lot of insightful videos here. I think it was sometimes last year but one. Last year but one. So even as I do that, make sure you subscribe if you are not subscribed. Like the session, the live session. Hit that like button as well. All right. So but basically, how to scale a small account is to maintain the risk. Risk should be consistent. So as your account grows, then you keep on scaling also your lot size, right? So, and also being a very, very, very disciplined, okay? So trading journal, position sizing, how to grow your Forex trading account. This one, right? So let me copy link. This one, how to grow your Forex account. This will be very much helpful to you, Marube Steve, right? So I've shared the link there, but it is also here in this YouTube channel. This will help you, okay? So with that, I believe there is no another question. I've been able to answer all your questions. So thank you guys. Thank you for the support. I really appreciate the support via YouTube. And yeah, let's keep doing this. Let's keep learning. Remember, it's every Friday, 10 a.m. We have a session, not unless maybe an emergent thing arises, but every Friday, we will always have a live session at 10 a.m. so that we can learn and being able to improve our skills. So thank you guys. Have yourself a wonderful weekend. Take care and see you next week. So Wednesday, remember it's Stocks Wednesday. I already began the first series. I posted the first series on the Stocks Masterclass. So make sure you go and watch that. It's posted in my YouTube channel, and every Wednesday I'll be posting a stock masterclass. Like I said, it's gonna be a series whereby we'll be learning. I began with the first series, what is a stock and all that. So just there for free, because I also want us to build a community of stock traders, right? Such that when we make money in the FX, we can also be able to invest that money in the stocks market. Okay, that's my goal, right? And I believe it will be very insightful to each and every person. Okay, so the other thing maybe probably is maybe on Mondays I'll try as much to post my analysis on gold, because I know many of the people want that. I'll try to be doing it either maybe probably on a Sunday if I get time, or probably on Monday. So those 3 days, they'll be very important: Monday, Wednesday, and Friday. Expect something to be posted in the YouTube channel. All right. So thank you guys, and have yourself an amazing time. Take care and see you next week.